Welcome to Life in Calgary, Alberta. I'm your host, Patrick Murray, and today we're going to talk about what's happening in the Calgary real estate market right now. It's February 2026, and we're going to look at the latest and greatest stats, which is the month ending January 2026, to see what's going on with all product types. So we're going to look at detached homes, semi-detached homes, row homes, and also condominium apartments. We're going to talk about what the stats currently say, but we're also going to talk about what this means moving forward, whether you're a buyer, a seller, or an investor. But before we do that, if this is your first time to this channel and you'd like to know everything there is about what it's like to eat, sleep, breathe, live, and play in Calgary, Alberta, then please just hit that subscribe button and click that bell so you get notified every single time I release a new video. Now, I've lived in several major centers in my adult life, settling in Calgary way back in 2001, and I've been a real estate professional here since 2010. And all this does mean I do have a little bit of specialized knowledge about the City of Calgary and the surrounding bedroom communities. So if you are considering a move to the City of Calgary or one of the bedroom communities, or you're considering selling your home, please feel free to reach out to me, send me a text, email, or a phone call. I will absolutely get back to you. All right, let's do this. Let's jump into things right now. Talk about what's happening in the Calgary real estate market right after this. Oh, welcome everybody. I'm looking forward to getting into the City of Calgary real estate stats for the month ending January 2026. Now, I will tell you that we're looking at something called benchmark prices as we go along here, which is different than average or median pricing because it's a far more stable way of talking about pricing than average or median, where, say, there could be a couple of sales in a neighborhood that were unusually expensive that could skew the data, or the reverse could happen as well, and that could skew the data. So benchmark pricing looks at the average type of home in each community and puts together this data, and it's for every type of product type as well. These are City of Calgary stats. Each sector of the city is a little bit different. Each neighborhood is a little bit different. So, for example, I'll just throw something out. I was reviewing semi-detached properties in the City of Calgary, showing them trending down over the last 3 months. However, and then even in in the city center, I should say, it showed that they were trending down. But in my neighborhood specifically, they've been trending up. So there was a big jump in price. So it does differ from neighborhood to neighborhood. So we are looking at the all of the neighborhoods combined here for these City of Calgary stats. So first and foremost, let's look at these dials here. So we see a balanced market and detached. We've got just barely into buyer's market and semi-detached. A little bit more into buyer's market in the row housing, and the apartment sector. We're definitely into the buyer's market. But they're fairly consistent overall. In the detached sector, we're looking at a 37% listing absorption rate. And what that means is if we go down to this active and sold listing down here, we see there were 1,753 actives that came on last month, with 657 of them selling, which is 37%. And that's how we get this listing absorption rate. So anything between 30 to 50% is considered a balanced market. Below 30% is a buyer's market, and above 50% is a seller's market. And again, this does differ from sector to city to sector to city and community to community. So jumping down to benchmark price, looking at detached homes, sitting at $724,000 for the month of January. At the end of January, that's down 0.32% from December, but it is down 3.42% from January of 2025. And again, we did talk about this active and sold, 48 days on market on average. Jumping over to the semi-detached sector, You can see this listing absorption rate is 28%, so into the buyer's market territory again, just barely. And again, this will differ from neighborhood to neighborhood. And we get this number, this 28% from this 418 actives with 118 of them selling, which is 28% of these 418 that sold. The benchmark price for semi-detached homes is $667,000 for the month ending January 2026. That's down 0.1% from December. Year over year down just 0.97% from January 2025. So this is the smallest sector of the market. It's about 10% of the market, to be honest, guys, for the city of Calgary, this semi-detached sector. But it's also our strongest performer in the market right now. And part of that has to do with a lot of the newer products coming up being, these semi-detached homes that are full-size homes by their own right, and some of them very, very beautiful. Some of them selling for, some of them can sell for, a few $1 million even. So that's what's going on here. 61 days on market on average. Moving over to the row sector, we're looking at a buyer's market sitting in this 24% listing absorption rate. So row is townhomes, just to make sure everyone's clear on that. And this 24% comes from this 785 actives came on the market last month, with 186 of them, or just 24% of those, selling. So to be competitive in this number, you want to make your home stand out for sure if you are selling, because just a quarter of them, or just under a quarter of them, are selling every month. The benchmark price, $420,800. That's up 0.1% from last month, which is positive. But year over year, we're down 5.25% from January of last year. 52 days on market on average. And then we can look at the apartment condominium sector, sitting at 19% listing absorption rate. So we are definitely deep into a buyer's market in this sector of the market, no doubt about it. This 19% comes from this 1,435 actives that came on, with just 273 of them, or 19% of them, selling last month. So you can see you really need to be cognizant of your pricing and competitive in the marketplace to make your property stand out if you are selling. Month over month, this is down 0.79% from last month, this $301,200 benchmark price. Year over year, look at this, down 7.75% from January of last year. Average days on market for a product that's selling is 65 days on market on average. So I mentioned I would talk a little bit, or I may have mentioned that I was going to talk a little bit about how this affects everybody. So, when we're looking at sellers, for the detached sector of the market, it's pretty much business as usual. Yes, it's taking a little bit longer. A big part of that is seasonal slowdown that's happening because we are in the winter months. And it also depends on what sector of the city you're in too. So these stats, I can drill down into sectors of the city. I can drill down directly into the neighborhood. So if you're curious about your neighborhood, or if you're considering selling, or know somebody that's considering selling, I can get the data right down to the neighborhood. And not every realtor has access to this. This is something that these stats are something that I subscribe to, that is extra and on top of what I do. So I like to share it with people so that they know what's going on, because I think the graphics are very helpful. And I've got some graphics that are a much more deeper dive into what's happening as well. So that's what's happening in the detached sector. I will just mention that, I do some luxury as well. And when we're looking at luxury properties are a market all onto their own. So they don't necessarily follow the same patterns as we see in the regular detached market. And that's because people in the luxury market seem to be less affected as to what's going on in the economy. They're higher earners. They might have a lot more money socked away. A lot of these people might not need mortgages. And so in the luxury market, we're seeing something totally different. It kind of follows its own trend. Yes, they may take a little longer to sell sometimes, unless it's a really hot property. And if you think it's a hot property, well, chances are somebody else does too. But overall, the luxury market is a little bit different, and it's quite strong overall. If you're so again, that's the detached sector. The same thing, semi-detached sector. You know, depending on the neighborhood that you're in, you just need to pay attention to what's happening in those neighborhoods. If you're selling, make sure your house stands out. Make sure you're priced properly for the neighborhood. To ensure your property stands out and to ensure you're getting showings. Now, buyers in this sector, you know, you're not going to walk in and get a home for a really low price either. You know, it's fairly strong overall, unless you're looking in the northeast or the east sectors of the city, where there's a lot more competition from builders and that sort of thing. But right now, if you're looking at the detached or the semi-detached sector, you know, it's a different market than the row or condominium sector of the market, because it really is a tale of two markets. If you look at our city, there's the detached and then there's the semi-detached sector. Now, looking at the row and apartment condominiums, lots of opportunity for people getting into the market right now. Lots of product to look at. Lots of great pricing right now. A lot of people were jumping into the market when the market was hot. And that makes me nervous when that happens, because there's a lot of competition, prices go up, and people are scrambling and not making great decisions. So right now we're in a buyer's market, which actually puts the pressure on the sellers. So the buyers are in the driver's seat. So sellers, you really need to be priced properly. You need to make your property stand out. Staging that always helps, that sort of thing. Buyers, again, huge opportunity. And typically we see a lot of investors that play in the row and apartment sectors of the market. And it's a good time right now. Yes, rents are softer. And here's the deal. You can't have your cake and eat it too when you're a real estate investor. You're not going to buy at a low price and have really high rents. It just doesn't happen that way, because the rental and the resale market follow one another. So if you are an investor, now is a great time to get into a product. Have some funds built in to be able to cushion yourself while you take on this new property. You may have to cover a few costs once you get a renter in, but everything is cyclical. These will eventually go up. And when they do, the rents will go up and you'll start cash flowing. So when that happens, I don't have that crystal ball. I'm sorry, I can't help you further on that. But I can only tell you what I'm seeing happening right now and the opportunities that are prevalent in the market right now.
As I said earlier, if you are considering a move to the City of Calgary or one of the bedroom communities, or if you're considering selling your home, please feel free to reach out to me. Send me a text, email, or a phone call. I will absolutely get back to you so you can live your life in Calgary, Alberta.